Bruce, I'll start with you. You think there's more pain for FANG and the other big cap tech names still to come?
Well, there's really been no sign of a bottom yet. Typically a bottom, you see lots of volume, a panic, capitulation. Now, with that said, the past 2 days, we've had steep down openings. That's certainly a sign of capitulation on the short term, so I wouldn't be surprised if we caught a rally somewhere in here. But the longer term prospects, I think we still need to see the market settle down. We need to see improvement in breadth. And I'd like to see the momentum, the downside momentum that has really been so strong for this entire period broken. And that would require 1 day or 2 days where the upside volume exceeds downside volume by a ratio of 10 to 1 or more. We haven't even seen one of those days this entire year.
Brian, in your coverage universe, do you see buying opportunities right now?
Well, I mean, obviously, you'd rather lower prices than higher prices. But, I mean, let's clarify, when we look at what's going on with Facebook in particular, those issues are mostly specific to Facebook. There's some read-throughs to Google in that a lot of what's happened there is also to some degree happening at Google, but nowhere near as badly. So I think it's really important to separate that out.
But when the stock's down 39% from its most recent high, does that look more attractive to you now, or do you still continue to rate it a sell?
I have a $125 price target and a sell recommendation on it.
And so, Brian, talk a bit about Facebook, because as you'll acknowledge, the initial Cambridge Analytica stuff didn't hit Facebook stock as hard, at least not for as long as a lot of people expected. The fundamentals in terms of advertiser attention to Facebook don't seem to have crumbled, though overall growth is an issue. What is the real argument for this keeping the stock down long term?
Well, here's the thing, and I think most investors misread Cambridge Analytica with respect to what the implications were. There's many, I think, who thought that all of a sudden there was a threat to users or advertising spending directly because of it. It was never going to be that simple. Users have been reducing their usage of the platform persistently since before the Cambridge Analytica incident happened. It's not clear that that caused any acceleration in that trend, although it might have. Advertisers were always going to be limited by the fact that Facebook already captures a disproportionate share of wallet, and that there's only so much growth through digital advertising. I think the bigger problem and the consequences of Cambridge Analytica, let alone what's come out more recently, is that the costs that the company will have to incur are probably greater than everyone expects. Right now, they apparently have 30,000 content moderators, almost all of which are outsourced. There is no way they have enough. I mean, hundreds of thousands is probably the right way to think about the kind of numbers they'll need, right? So that's a risk on the downside. So, further, Brian, what other regulations will follow?
You think their guidance on basically security has been undershot by 4/5?
I'm saying that I think that most investors even now are still looking at their guidance on OPEX as a conservative number, right? And I think that because Facebook, and this is again a point that was highlighted by certainly the Times article, the company doesn't have a handle on its operations. So what credibility should you put to the guidance they provided? It might actually represent what they think the numbers should be, but it's clear that they don't have a complete handle on the company, which only increases risks to the downside.
Before I let you both go, Bruce, stocks are now in this historically strong seasonal period, whether you're talking about post-midterms or even just the fact that it's holiday season. But the Dow's down another 450 points right now. How would you categorize this? Are we going to be bucking a trend here?
Well, seasonality is important, but it doesn't always work. So we don't give it a whole lot of weight in our office. In any event, I still think the market has to show signs of capitulation. We need to see some evidence of a bottom forming, and so far we haven't seen that. So I would say caution is advised.